In this video, we'll explore the necessity and the importance of the 1099 form. When you have expenses and you're paying those expenses from your business, and if you pay somebody more than $600, you're required to file a 1099 form if the recipient is not a corporation. So an LLC is not a corporation. They might have a liability protection similar to a corporation, but for tax purposes, they're not seen as corporations unless they check the box. And it could be an LLC that files as a corporation, S or C Corp. But you may not know that if you're paying an expense and you're going to need to issue a 1099 to the recipient. You may not have that information. So in an abundance of caution, we recommend to issue a 1099 to anyone who provided services. It also includes your landlord, anyone who you cannot confirm has a corporation. Now, let's say that you don't provide a 1099 or you forget to give a 1099 to somebody and IRS opens up an examination or an audit of your company and your tax return. IRS will look at certain categories of expenses, especially if they get your general ledger, or if they just look on your tax return. There's some typical categories where IRS will expect to see a 1099 filed for those expenses, such as contract labor, outside services, rent. And if you're paying somebody as a consultant or for professional services like your CPA, and your CPA does not have a corporation, you should provide them with a 1099. You'll need to get their EIN number or their Social Security, their full correct name, and their address, and you need to mail it by the deadline at the beginning of each year. So if you don't provide a 1099 to somebody and you deduct that expense on your return, and IRS audits you and says, okay, well, we see that you're deducting, $150,000 worth of expenses, and these are for services, and none of these individuals or companies received a 1099, IRS can do one of two things. They can disallow the expense in full, or they can allow the expense and then assess you a backup withholding tax, which is approximately, I believe it's about 24% of the actual gross amount of the payment. So basically wipes out the tax value, the deduction itself. So it's really important to file your 1099s and do them on time. And if you file a large number of them, for instance, we have escrow companies that have been clients, then they typically file thousands of 1099s. And if they don't file them on time, there's a hefty penalty that can be assessed. In some cases, $280 per 1099 that might have been filed untimely, or it should have been electronically filed. If you have more than 50, you have to file them electronically. So be careful, understand the rules before the deadline, and make sure you have the correct information that's reported. In other words, all of the payments should be included. And if you miss some, and you, for instance, paid somebody $10,000, but you only give them a 1099 for $6,000, IRS could disallow a portion of those expenses. I'm John Milikowski, founder of Milikowski Tax Law. I hope this information was useful.